For more, our next guest says home buyers have begun to feel an urgency that was missing last year. Let's bring in Stephen Kim. He's a home builder analyst at Evercore ISI. He says buyers have a bit of FOMO too. Stephen, welcome. It's good to have you.
Thanks very much.
So how would you describe conditions? Because, I mean, we're talking about day-to-day swings in mortgage rates, and I have to imagine that people are, if anything, that might make them err on the side of caution as opposed to, wanting to jump in one day when they think they might get a good rate.
Yeah, you might think that, but the reality on the ground is something quite different. I think that what you're going to learn this afternoon when Lennar reports is that, very surprisingly for many, the housing market, and particularly the sales by the public builders, actually strengthened in February, despite rates which moved, as Diana pointed out, back up to close to 7%. You're not going to hear that created any softness at all for home builder sales, and in fact, quite the opposite. And we think that what's happening here is that the buyer has moved from a fear of buying at the top to now beginning to see a fear of missing out. It was the case 6 months ago that rising rates gave everyone the concern that home prices were going to be falling and they were making a grave mistake if they bought a home, and so they waited. What you're hearing now is that people are saying, I can afford the home now, but if I wait much longer, I'm hearing rates are going up, I might not be able to afford later. We are seeing that the builders are actually having product I can move into quickly. And you know what? I'm getting some deals too. And so you know what? I'm going to buy today because if I wait, I will miss out. And that's the change that's happening. And it's really fascinating because investors love to talk about math. But when it comes to buying a house, the buyer has a lot of mental things going on. It's not just math, it's mental. That's what we've been telling folks.
Where are we on the builder stocks? We're showing there the chart where we saw them climb. They sort of hit the lows last summer, climbed up, went back towards the lows last fall, and are, the XHB around 65. It's kind of where it was 12, 18 months ago.
Yeah, the home builders have outperformed the S&P by about 20% over the last 3 months. And that is largely due to the fact that the negativity around the industry was so profound, with lots of good reasons, by the way. And that what you've seen in the months since has actually been surprisingly good performance. You've had a little bit of help from rates, not a lot though. I would say rates were at 7 in November, and then they came down to 6, but then they went right back up to 7. So really what it is that the housing market has proven to be far more resilient than most people thought. We just don't have enough homes in the country. We have inventory that is chronically low, and that quickly turns a market where people are concerned about buying into a market where they're concerned they're going to miss out. And that's the real shift that you've seen this spring.
All right. So what's the favorite Stephen Kim stock right now?
Well, we have all the home builders we cover rated buy. That's been the case, for quite a while now. We think that this group is just fundamentally misunderstood. And so if I had to pick a name to buy, I actually think buying Lennar ahead of the print is a totally fine thing to do. I think they're going to have a lot of
walk it in front of the print. That's confidence.
I think there's a lot of negativity, and I think people are concerned about their margin guidance. Everything that I've heard in the last couple of months suggests to me that things have actually gotten a lot better since the last time they spoke to the street.
Well, there still does seem to be secular demand for housing that, if nothing else, speaks to why we might see any durability in what otherwise is usually a very difficult point of the cycle. Stephen, thanks so much for your time today. We appreciate it.